And Denver 7 is helping you shop smart. This morning we're tracking if there's any impact on gas prices because of the conflict in the Middle East. Now AAA says statewide the average is $3.13 a gallon across Colorado. That's 8 cents more than it was a week ago, but it still is less than what we saw this time last year. Now I want to bring in Bruce Allen from Bruce Allen Investments. Bruce, thank you so much for being here and giving us a little bit more insight into what's going on in the Middle East. I got a few questions for you. We know that when these conflicts happen, there is so much focus on the safety of the individuals that are in these cities, but also it's impossible to say that there's not an effect on global markets and economies. So what are you and other investors looking at in this particular conflict?
The big thing that the markets and professional investors are focused on in this conflict is what could happen if this conflict spirals and gets more severe. How could that impact the supply of oil? There are two things that could happen potentially, but if the price of oil is impacted by Israeli attacks on Iranian energy assets, or if the Iranians take a very extreme step, which is not likely to happen, hopefully, but if it could happen, if that happens, if they close the Strait of Hormuz, the price of oil might rise significantly. The reason why that's significant is that the price of oil goes through a significant channel in the Strait of Hormuz, and about 20 to 25% of all the oil that is delivered to the world and 33% of all the liquefied natural gas go through that very narrow strait between the Persian Gulf and the Arabian Sea. And if that is somehow closed, the price of oil has been guesstimated or estimated to rise potentially over $100 a barrel, and right now it's trading at around 73 and change. So higher oil prices can impact the U.S. economy pretty significantly.
And that it doesn't only affect the economy, but also it could be a direct impact on people's wallets. We know that the Fed is meeting today and tomorrow. They're going to be talking interest rates. They've held steady for a long time, and the Fed doesn't want to do what they did after the pandemic and react too quickly. However, we know that energy prices are a major contributor to the CPI. So kind of what can we expect with these oil prices, gas prices, and how that might affect interest rates and things like credit card debt and mortgages?
If the price of oil is impacted by this crisis and starts rising, higher oil prices have the potential to raise gasoline prices, and you're right, we would all feel that at the pumps every time we go to fill up our cars. So if the price of oil jumps, the price of gasoline has the potential to jump, and if the price of gasoline jumps in the United States, that's a big issue for Americans. That could increase the inflation rate, and if inflation steps up, the Federal Reserve's tool to dampen down that inflation is to raise interest rates. So higher oil prices, higher gasoline prices, potentially higher inflation and higher interest rates. Let's hope none of that happens, but that's what the markets and professional investors are worried about and taking a look at right now.
And we know that consumers at home have been worried about it. Survey after survey shows the inflation concern among Americans is really high right now. So Bruce, thank you for coming on here, giving us some of your expertise.